Welcome to the Not Your Broker Blueprint with Mike Ampson, Josh Donor. Excited for this. We've known each other a long time. We finally getting a pod on. So this is super exciting. In these episodes, we're going to have various guests on here in Toronto, which we're excited about. The kind of nicest podcast coming out of Toronto, if I may say, at the Hover Studios. So we're excited about that. Mike, you and I have known each other since childhood. We're doing this thing. You want to give us a bit of a breakdown of, Not Your Broker, Omega, and how this all began?
Yeah, so for Not Your Broker, it goes a while back. So I've been trading for 15 years. We were trading back in school together, in high school, skipping classes. Yeah, we'd run down
the computer lab, go on Yahoo Finance and check if our bags were pumping in 2009.
Yeah, and then it progressed from there. I don't think we really knew what we were doing then.
No, definitely not.
But there's been a learning curve.
Yeah.
In terms of Not Your Broker, there was always the element, when you've been doing something for X amount of time, people are going to ask you, what are you doing? What are you trading? And it was just like, well, I'm not giving you financial advice. I'm not your broker. Call your banker. Call your own broker. Get advice. So it kind of turned into this. Not Your Broker is a private group. So it's just a bunch of guys that either I've worked with on Wall Street, Bay Street, etc.
And I've been in your Discord too for some time. So it started as a private Discord.
And still is.
Still is. And you've brought in some really good quality people into that. Maybe just explain kind of the characters that you have in the private Discord and how that's even morphed now to Omega as well.
Yeah. So, do you want me to go over the individuals and kind of
Hey, they're all characters.
They're going to be watching. So we'll start with Edison. So Edison was my partner at the family office that we ran for a bunch of years. Talented trader, quick learner. He's awesome. He hops in every now and then, not too frequently. Then we'll go down to John. So John actually traded in the pits through the 90s. So was at CBOE. Been trading for a long, long time. Super talented in derivatives. And he's been with me, I feel like, since the beginning. Then we have Miguel. So Miguel is kind of our little superstar in there. He was with Goldman for 15 years. He's actually the founder of quantitative strategies at Goldman Sachs. And now he actually runs Phelon Capital out of Miami. And he focuses on fixed income type strategies. Mm-hmm. Super talented. I don't want to miss anyone. That's part of the
Chris.
Chris is a stud. He's our options guy. Used to work with him at National Bank.
He has a nice car garage, eh?
He does. He's got a collection, a large collection.
A very large collection.
Yeah, he's always traveling. He'll probably hate me mentioning any of this stuff. Yeah, he's a superstar.
Yeah.
You've seen it. He's doing okay.
Yeah. What I like about the private group is the talent in there is awesome. And especially as someone who didn't come from that world, but is traded for a decade, it's cool to kind of see everyone in there doing their own thing. Chris doing option strategies, kind of learning how they're looking at the markets, et cetera. And then your commentary kind of overlaid on that.
Yeah. And that was the goal, is just to come in, share ideas together, and then use with that what you will. Yeah. There's no one going oh, you should buy this, you should sell this. Just we're going, hey, here's what we see. And it's just it's almost just like a creation room, an idea room, idea hub. And we just go in and it's nice to see people that see things differently than you.
Yeah.
And I think that's what makes a market. And I find that it does help you make decisions. You're always going to have trades that are offside on you, but as long as you stick with it over time and you have talent surrounding you, I'd say that's one of the most important things. That really helps.
Yeah. And when Mike in 2022 sent me a DM, January 2022, you said, sell something. Yes. And so at that point, I think I was pretty high on my, CryptoPunks were worth a lot of money. I had a huge portfolio of assets. My Galaxy stock, shout out Mike Novogratz, ran up from $2 to $47. Was able to buy a house, do all that good stuff. But at that moment you said sell something, and you're looking at S triple Q, so short the Qs, and maybe run through kind of like that thought process in a room like that, and then what that means to someone who's more retail focused like myself, making kind of coming into that decisioning that you guys are as like really pros, and then me seeing that. And it saved me a lot of money, but I also made a ton of money on S triple Q on the way down.
Yeah, we were essentially, I have a framework, and it would be based on kind of similar to the all-weather model that Bridgewater would use. So, and there's other guys that do this and they do it very well, but you want to have some sort of macro outlook and something that helps you. So you want to be pretty plugged in on growth and inflation. When looking at that, I remember it was, I think it was like November 21, and I was going, we're in trouble. So we were tracking it pretty hardcore. And I do remember, I think it was January, beginning or late December, messaging a bunch of the guys and saying, I'm pulling the fire alarm. Get out. Cut it all. Get out of your crypto. Get out of your...
Yeah, Bitcoin at 64.
Yeah, Bitcoin was over 64K. Ethereum out I unloaded everything.
Yeah.
And went short.
Yeah.
And I said that... I in 2023, I did the opposite. I got a little bit wrong because I was pretty bearish still.
And that was during the banking crisis with, Stargate. Was it Stargate or who's the bank?
Silvergate?
Silvergate, yeah.
Yeah, everything just kind of folded, and we did extremely well. And we were fortunate enough, too, like on this run up, to be pretty heavily into Ethereum, Solana.
Yeah, and we'll get that in a second, too. Yeah.
But yeah, that there was definitely a process there.
Yeah.
But I very rarely will make suggestions like that.
Yeah.
But I do remember, I think I phoned you and I was like, I'm not kidding around.
Sell something.
I said, it's time. You're like, okay.
Yeah.
I think at first you were hesitant, but I was like, no, I'm pulling the fire alarm.
Yeah.
Like, this is not going to go well.
Yeah. So it was good being in that room during that time with those guys. Now we've taken that, and specifically you, from a private, not your broker group that you charge money for, private Discord, that's spun into Omega, which is kind of the more open, crypto-focused community. Do you want to run through maybe the founding of Omega? It's about 500 members now.
Yeah.
Yeah, how do you think of Omega?
So the idea behind that is based off a not your broker, but it was getting into the crypto space. And with Christian, who is also a very talented trader.
Yeah, shout out Christian.
Yeah,
we
shout
love
out to
Christian.
Yeah, he's awesome. Super, super talented. We just decided that this was going to be the best way into the crypto market and to gain the trust of people in crypto by offering like high-level analysis to them. And kind of coming into an industry that lacks kind of any moral compass.
Yeah.
So we wanted to come in and be like, we're going to do it differently. We're going to offer integrity. Not going to be anonymous. Like, here's who we are. Here's what we do.
Not charge a cent.
And give you high level stuff.
Yeah.
And then eventually that will turn into the option to, we're going to build out an educational series and go, it's not going to have everything, but it's going to give you a pretty good blueprint on how to look at markets.
Yes.
And yeah, that's kind of how that started and looking to continue. And it was, there's more to it than trading. It was coming in and building out relationships. That was the most important thing to me.
Yeah.
So coming in and going, who's important, because we're coming in whether you like it or not. So you're going to want to get to know us.
Yeah, totally. And so when someone opens Telegram, they go into Omega, what kind of stuff do they see in the feed between you, Christian, and other kind of experts in the group like myself? What should people see in the feed?
Like in terms of like
content.
Yeah, content. It's just analysis essentially. I think how I try. I'm more of, here's the entire framework with like a macro approach. So I'm not doing anything short term. To me, that's a zero sum game. But Christian has a knack for the shorter term stuff.
Yep.
And he draws the squiggles. You'll
squiggles
see.
and astrology lines. They're good.
Yeah, we always joke that technicals is astrology for men.
Yeah.
So it's
bet.
Yeah. Yes. Yeah. So yeah, he does a great job. I feel like he's awesome in there because he's a great community guy.
Yeah.
Like he's on top of everything. That guy works super hard.
Yeah.
We got to give a shout out to Blake as well. He helped form Omega as well.
Yeah.
And then obviously you too. You come in and
Josh
has had some crazy good trades. Josh is a talented trader as well, not to sell him short.
Yeah,
He's been
appreciate
doing
that
for a long time with your old BNN calls.
Yeah. Yeah, used to call into BNN in Toronto and shill my latest gold mining stock as like a 17, 18-year-old kid.
Yeah.
They're like, holy crap, this kid's 17, called into BNN.
To get your 5% pop the next day.
5% on evolving gold, man. That's what the move was. Cool. So Omega, we'll link both those in the show notes, but I think Omega's a great spot for people to come in, get good quality information, talk to real people like yourself that are building out these strategies. Nothing is shilled in there, which is great. Like we talk about projects, but kind of there's a spectrum of Telegram groups in crypto. Some of them are predatory in nature where the people who run them take advantage of the followers there. And then there's some that are, trying to give real research and opinions and good information. So
yeah. And a lot of the charts too, they're designed to be, you have ample time to make your decision.
Yeah.
So at the end of the day, it's always going to be up to you, but you are going to have designated areas that are going to have a higher probability.
Yes.
And then it's up to you to pull the trigger on them.
Yeah.
So, but I don't think many people are offering stuff like that.
No. And actually, so the great thing I love about this group is you have Mike who looks at more the macro time frame, longer time frame, kind of higher and lower supply and demand zones and probability zones. And then you have Christian who complements that really well with understanding the structure within that move and saying, hey, there's opportunities within this that people can make money on certain moves. And almost like it's great to, trading a lot of the times is kind of seeing the future in some way, seeing what hasn't happened yet. Yeah. And Christian's really good at helping people visualize this could be a path or this could be a path. Yeah. And you're good at saying, hey, these are areas of probability where we want to be buying, where we want to be selling. So yeah, does that kind of make sense, or how would you think about that?
I would say that's proper. I think that you should look at the markets as fractals. And once you understand that, you understand that there's substructures within the overall structure. That might be a little complex, but
that's fine.
That's something we'll get into for sure in either the future or later on in this. But I think that's a good way to sum up kind of what Omega is. And eventually, as people like succeed in there or are talented, eventually the floodgates, like Not Your Broker will go public, right? Like that's a goal. It probably already should have been, but it's a work in progress to get that going. It'll be nice to see people evolve and make it into that class because it's not like you can just come in.
Yeah.
There has to be a certain, like you offer something.
Yeah.
So, yeah.
Yeah, cool. So, I want to talk about your trading journey, your background for kind of where trading went from a hobby that you and I did in high school, did pretty well from the 2009 bounce in March onwards.
You bought the exact bottom.
Bought the exact bottom. I bought RBC, so ry.to here in Toronto, of course. $28, I remember, was my first trade. What was your first trade? Do you remember?
Honestly, no. I've had too many, yeah.
All right, too many trades. But yeah, where did you go from trading as a hobby to doing it professionally at a family office? Like, give your kind of trading financial professional background.
Yeah, well, actually, I think it was Scorpio Mining.
SPM.
Yeah, SPM.
Or .v, maybe if it was on Venture.
Venture was on the Venture.
Yeah.
Okay, so yeah, it was a hobby. We had another buddy in school that was also a trader. I won't say his name on here.
Yeah.
Great guy.
Yeah, good guy.
Erickson.
Yeah. Oh gosh.
Yeah, it was always kind of just a hobby. Did pretty well, but like not really. And I think that's what got me hooked. I was like, why can't I just like be consistent at this? It was always it was a struggle, and I'm sure there's lots of people that have traded that go through the same journey. It's hard. I don't care what anyone says, and anyone that tells you it's not is lying to you. And eventually it got to the point where, I mean, we were going to investment conferences together. I can remember back 2012, 2013.
Timothy Sykes, Las Vegas.
Yeah, and we were just exploring different types of markets, different ways to trade, and I knew that was not sustainable.
Yeah.
And
in some ways, those strategies were built off the following that those guys may or may not have had.
Correct.
Yeah.
And I was just like, I got tired of like just not understanding, I guess.
Yeah.
To put it simply. And eventually I just remember sitting down and going, I'm backtesting this. And I went through probably 20 years of market data and just put them into my stuff, and I started building like quant models and going, I'm going to find a way to be profitable long term. And that took a lot of years, but eventually I got it down. And so there's a million different ways to cut the pie. I have multiple strategies. I have discretionary strategies, quant strategies. Pretty much I got at least 15 that are working. That's when it turned serious for me. So back then, and that's when I was like, okay. And some of them didn't like necessarily have a great, compounded annual growth rate. And then once I got them down, though, I kept working. How do I get an extra %? How do I get an extra %? And I did that year over year, and then I started getting some good results.
Yeah. And Mike and I have known each other for a long time. We're childhood friends, so. I always remember you'd say, like, I'm back testing data. I'm like, oh, okay, cool. And you're like, no, seriously, it's, this is really interesting. And I think, seeing you go from that to, running and being part of strategies on funds and stuff and having success has been super cool. And almost like, Mike's a superhero, I guess, of course, But yeah. Cool. Like, that's awesome. So that kind of leads me to like, maybe for you, what's the difference between, someone who consistently makes money and someone who's just kind of, more retail focused, who is struggling? They say 9 out of 10 traders lose, but what makes a 9 out of 10 versus that 1 out of 10?
I feel like they don't put in the time to actually go, do you have a strategy that works? Like, if you're just going in and trading, might as well go to the casino. Like, you do have to come up with something beforehand that you've back tested and go, this works. So if you're not doing that, you're already handicapped.
Yeah. And for those who don't know, back testing is taking a data set of previous price history and then applying a strategy that you think of today to that data in the past and seeing what its outcomes. Is that
Yeah, no,
fair?
Exactly, yeah. And then as you get good at that too, you look for relative value. You look for how certain assets correlate, are there divergences, and those divergences close. And that's what creates opportunity. That's more on the quantitative side. But yeah, I think that they need to focus on, first get good or like not even just be like profitable. And that can take you 3 years easily. Like, it's not. People talk about trading as like, oh, I'll learn it overnight. I'll watch a few YouTube videos. I'm like, no, if you're doing it properly, it's like getting your PhD. Like, it's going to take you multiple years just to become profitable. And then from there, you can start adding on layers to it. That's my opinion of it's a difficult undertaking. But there's definitely ways to speed up your learning curve. And I would say it's easier now with the amount of information available to you than we had.
Yeah.
I was charting on graph paper at one point when I started. So, and we were phoning into the bank. We were phoning our broker $50 a trade commission.
Yeah.
So I'd phone in from high school.
Yeah. And forever the TSX quotes on Yahoo were 15 minutes delayed.
Yeah.
I'm like, what's this? Come on, TSX.
So just the quality, the speed at which you can trade now, you have an advantage. I think retail has an advantage relative to institutions for speed of trade.
Yeah.
Like, they're able to get in and out where they can't do that, right? You have to execute properly. It's just different.
So is retail buying breakouts and selling undercuts?
Yes.
Yeah.
So, So, if you're buying breakouts, 68% of them fail. So it's probably not in your best interest to be doing that. But yeah, that's how it works. They provide liquidity to me when I need it.
Yeah.
And they hand me their shares when they stop out too.
Yeah. And it's an emotional game. I mean, if golf, we joke about this, like golf is the hardest sport.
Yeah.
Well, trading is like 10 times harder than that.
Trading at the highest level is the most competitive job you will have.
Yeah.
Guaranteed. As someone who played competitive sports so life, this is a different level.
Yeah. PvP, which, kind of zero-sum game a little bit. And so I think we wanted to do this, and I'm going to get you to explain this in a moment, because someone like me, I've been in the crypto industry for 8 years now. I've been kind of at parties. I remember, when ETH was like $10, I was like, dude, you should look at ETH. And you're like, bro, shut up. I want to drink, But yeah, maybe and so for me, it's been always trying to tell people, because I saw from a technologist standpoint, the technology was really powerful.
Yeah.
And I think what we wanted to do through this podcast too was kind of celebrate a little bit of people who saw this industry early.
Yeah.
And that, hey, you're not necessarily crazy, even though everyone's told you've been crazy for years. But yeah, maybe just quantify kind of like how you see that evolution that's happened and kind of where you play in all of that.
Yeah. So, and I know we had discussed that. I think that at a certain point, credit is due, especially to the people that were, visionary to it. And I always told you, I was like, listen, man, I'm not going to trade this asset. I'm not interested. When it's around for a decade, come and talk to me.
Mm-hmm.
And then that was, and I remember kind of dabbling in 2016. And then obviously when I came in to start trading crypto, I was like, all right, Josh, it's been here 10 years. I'm coming in. It's not going anywhere, no matter what we tell ourselves. Maybe it still will, but I highly doubt that at this point. I just wanted to see the evolution before being comfortable coming in full tilt to it.
And so I think I remember you getting really serious. We had FTX blow up in November last year, the year prior. Yeah. And then over that summer is kind of when you started getting serious. And walk me through kind of, because we'll get to your Solana trade in a moment, but walk me through kind of that, getting into the trading side of crypto, which is a different world. You're not opening your traditional brokerage platforms and putting size on. You're doing it through platforms you've never heard of. And how that happened for you.
Yeah, I just finally decided. I was like, obviously I put in some work before I hopped in and had been tracking certain patterns, because there was a belief that, crypto is heavily run by legacy CTAs.
Yeah.
So I started testing those strategies and be like, okay,
yeah,
they work and they're very effective. And if anyone's listening that's institutional trader, they know exactly what I'm talking about when I say that there's a nice edge in crypto versus TradFi.
Yeah.
So if you know what you're looking for, there's a lot of money to be made.
Yeah.
There's specific patterns. There's specific. I can do the list of what's important for me. Say I can't meet a CEO of a Fortune 500 company. I can't just call them up, right? Well, in crypto, I can get a founder on the phone the same day.
Yeah.
So there's the interesting part of that can help you build a thesis for your fundamentals. But
they're also probably the same age as us.
Yeah, which is interesting. But people always argue fundamentals, technicals, and what's first, what's second. I would say technicals are number 3, because they help you capture the meat of the move. I find them like they're imperative to what I do. But fundamentals come second, because that's your list of what you're trading. You can't be, if you're trading crap, you're going to get crap results. You might have your 1,000% play, but you show me a guy who's trading, steadily. Show me the guy doing that, and I'll show you a guy who's made no money, and I'll show you a guy who's made money. And then number 1 is information. And that applies to TradFi as well. Whoever has the best information will win. So that's your Citadels. That's your But that comes back to the point of being able to talk to founders and going, okay, you know what? These guys, I like their team. And I found that out in one day.
Yeah.
So there's an edge in that.
So this past summer, you started to get excited about Solana at $20. And you posted this. This is on Twitter. This is in Omega. And you used, we probably won't name the platforms, but use certain platforms to execute that trade. Can you walk through kind of the Solana trade, how you approach that, and just, kind of where you see, trading now? Yeah.
So for Solana, it was like one of my strategies is a systematic strategy. So I got a bullish flip. I let it take liquidity, and it came back down into my buy area, which was sub $25. So I just pressed it because when I get this set up, it's got a really high probability to win, and you got to know when to put your chips in and when to take them out. So for that one, I hit it pretty hard. Did I know it was going to 100? No. Did I think it was going to see 40 plus? Yes. I was pretty convinced. And if I'm wrong, I stop out. No harm, no foul. But if I have a high probability to win, I'm going to put my chips in. And I was also putting out you've probably seen it forever through Not Your Broker, but the Bitcoin macro chart was a big reason as well. I was going, all right, we are in a 2 pullback here. 3 is typically the largest. I had a bunch of analysis telling me that this was a really good spot to start getting aggressive in crypto. So we did.
Yeah. And that trade performed incredibly. It's, 25 to we're on 116. During that time, I met Raj and Anatoly when Solana's testnet hadn't even launched yet. And so I saw Solana before the Sol token even existed. It went from, I think they had their Dutch auction at like 30, 50 cents Sol. And then it started trading for a few years in the low single digits, $1 to $3, and then just ripped last cycle. And then obviously FTX happened. Sam was a big backer of Solana. And then the criticism, I think, around Solana was that it was this VC-backed kind of centralized chain. But what I noticed over the last 2 years and the last kind of 12 months is the developers never went away.
More developers.
Yeah, more developers came in. And while the metrics of TVL, which is the value on the ecosystem, yes, it went down because I think a lot of it was a vanity metric that was propped up by Alameda, et cetera. But the developers stayed there. There was really great products that continued to be built. And now Solana looks like an unstoppable ecosystem. It has feature sets that are coming in through different token upgrades or data that you can associate with a token that are allowing for regulatory, feature sets and whatnot. Maybe where do you see kind of Sol today and how do you manage your trade?
Yeah, so I've taken off about half and looking to reload, to be honest. I don't know how much I can get into about how I'm going to play it, but I believe that, one of the things, the KYC. So at a fund level, love that. Mm-hmm. So I think the entire ecosystem of crypto needs more of that.
Yeah, totally.
And people will be like, no, we don't. If you want the big money to come in, you want to make money, that's exactly what you need. So, I love that. I believe we're going to see at least 200. In a bull, all-time highs, I could see 500. I don't know if I'm allowed to throw targets out, but I could see I do see a lot more upside. I guess the difficulty of doing something where you film it and give out price targets, take them with a grain of salt because they can change daily on information, right?
Yeah, and so here's this is what I was referring to. So this was a big development. This was talked about at Token 2024, Token 2022, I think. But token extensions, it's a number of feature sets that can be added to the SPL standard that allow for certain compliance things. So things like on-chain KYC. Another really cool feature was they were going to allow a third-party auditing firm to see the on-chain data, but the data would be encrypted or would be obscured from the public. So the transaction's happening on-chain, and it's settling on-chain, but people can't see like you can on Etherscan, like, oh, that's how many tokens they're trading or what product they're using or what contract they're interacting with. However, a third-party auditing firm with a key can actually see that on-chain transaction and audit for it. So I love this functionality because I think it takes the best of, on-chain public settlement on this global settlement layer, but also adds in some of the compliance things and the privacy items. Like, a lot of financial institutions, they don't want the general public to see what they're doing necessarily on-chain.
No. Yeah, no. I'm a big Solana fan.
Yeah.
I think it's great. Big Ethereum fan. Big Bitcoin fan. I don't know how much I can say because of the institutional component to it, but there's guys that are very high up in institutions that I know personally that are huge closet crypto guys, and these guys would never go public saying that. So, and they've been in a lot of our back and forth messages. 140K Bitcoin is what they think we're going to see this year.
Yeah.
From a macro lens, I'm like, I don't know how. Actually, yeah, I do. I do know how, but it's very possible, yeah.
So there's a lot of edge in that. We've talked about edge in crypto versus, the macro world that you're used to. Maybe talk about the crypto markets, specifically more of like the structure of those markets. I mean, they're global markets. There's hundreds of crypto exchanges that are all trading the same consistent assets, which is really fascinating. Then you have DeFi, which is a whole nother ecosystem of applications that are not run many times by anyone.
Yeah.
So how do you look at kind of the market structure happening in crypto versus, traditional macro environments? And then why do you think that's attracting so many, traditional market, finance guys?
Yeah. So in TradFi, I'd say that there's so much arbitrage happening that if you have an edge, it gets squeezed. It just it's gone quickly and you missed it.
Yeah.
So in crypto, that's not the case. So you do, because you don't have these massive players in yet, there's edge that exists. In TradFi, like you're just, how I personally execute in TradFi is just very directional order flow, structure based, systematic trading. Just lots of discipline, wait for your spot, and hit it when you get it. In crypto, it's the easiest way to define what you can look for is you're competing against retail. It's not that hard to beat retail. Even if you're just a chart guy, you can pretty much see what they're going to do on a chart. If you have enough experience trading, you can see what they're going to do. So basic liquidity stuff, I'll execute around that, and it's like a printing press, to be honest.
It's actually quite remarkable. I mean, Mike Novogratz famously bought, I think, 1 million ETH at $1 from Vitalik. That ran to 9. He sold it all. I'm sure you'd love to hold that 1 million ETH today, but he was kind of like the first institutional guy that came through the door. But this has been a really large retail movement, and kind of started from even like a political standpoint of, libertarian viewpoint of like, hey, we don't trust humans. We trust algorithms and computers more than humans to manage money. And I mean, there's digital currency experiments have been going on since the 80s, 90s. And the early cryptographers, there's tons of digital gold experiments, digital cash. But Bitcoin really solved a lot of computer science problems. And basically taking a ledger of what people own, the tokens or cash people own, and putting on every computer that ran that ecosystem, which made it hard. It made it like real, because you couldn't overwrite it, which is, that's a computer science innovation. And I think a lot of times when I look at the regulatory climate and even just people in the government and regulators that comment on this industry, they miss that this is a computer science revolution first, rather than this is just technology catching up to finance. Not necessarily. It's a kind of a really new way of doing database structures. We won't comment on regulation at all here, but I think it's just, having that conversation now is exciting because the SEC approved the Bitcoin ETFs. That's like the first real product that's been approved. So maybe, like, how do you see that happen? The regulation, like, kind of how do you think about that now today versus, a couple of years ago, it didn't really exist.
Yeah, no, you want regulation.
Totally.
Even though you're going to always have two sides to every argument, you want regulation.
Yeah.
It's good. And then what was the other part of that?
Well, I think it was more, I think I've definitely been pro-regulation the entire time. I think it makes the industry much bigger, makes it safer. But it was just like with the ETF announcement, it was like now finally we have at least this is recognized.
Yeah, no, the ETF is huge. I can think all the way. We were pretty young then, but I can remember back to when the gold ETFs came out.
Yeah.
Right. So 2004. I don't even think people are prepared for the type of passive inflows that will come from that. So with gold as an example, because we can only look back to history to try and make a prediction, that started an 8-year bull run in gold once they got their first ETFs. So even just if you look at the global liquidity, just a small percentage of that, and it increases year over year, just a small percentage being put into this off the zero-sum game, let's get 1%, 0.5%, whatever it is. That's a dramatic difference to the price of this. And that's why I love Bitcoin, because it's mathematical. And what I mean by that is, the supply of it. So if X amount of money comes in, well, then here's what it's worth. You don't need to think too hard about it.
Yeah.
And that's exciting. And if you really look out, like even 2027, 2030, and you think about projected liquidity globally, you're looking at, and you start doing the math, if X amount goes into this, it starts to get pretty ludicrous. Like you almost I usually exit out of my program when I do that. Because I'm like, okay, these prices are crazy.
Yeah.
So when people throw out 100K and people are like, that's ridiculous. No, it's not even close to ridiculous. Where if you told me that a bunch of years ago, I'd be like, yeah, you can leave my party.
Yeah, which you did tell me a few times. No, but I've owned Bitcoin, ETH, CryptoPunks, which were the first NFTs. Like those three assets have been some of the best performing assets ever in existence.
Yeah.
And to own three of them and to hit all three is kind of like, so, if you're listening to this and you've been in this space for a while and kind of people have told you you're crazy over the years, it's okay. This is the podcast for you.
Yeah, no, yeah. And I'd be the guy who was calling you crazy, but I've converted.
We have a convert here, which is exciting.
Yeah.
And someone who's talented.
Yeah. So I would, even some of the stuff we had talked about, like retail, we use that word a lot. I actually am a believer that retail is a lot smarter than we give them credit for now. I don't think that there's as large of a gap as people think. Like, retail has more money, and not than institutions, but retail has more money. They're self-directing their investments, and they've gotten a lot smarter. So I actually don't. It's not this game of like, oh, we're playing against some dummies. You're not.
Yeah,
retail is pretty smart, and I do think that we got to give them a shout out to say, especially the people that were early in it. Let's give credit where it's due. Like it doesn't need to be this negative news cycle all the time about, you got a lottery ticket, you did this. And I think that maybe that comes from jealousy or envy, but these people made a smart bet and they won.
Yeah. And they're the 70% of the Bitcoin supply that hasn't moved in a year plus. Like, what people don't realize, the Bitcoin on exchanges and what's actually tradable through the ETFs is like 30 to 20% of the supply.
Yeah. And those were I couldn't believe it. Like the HODL. And where did that start? That start from Reddit? The guy spelled it
look,
wrong?
I want to say Poloniak's Trollbox guy misspell hold, and it came out HODL, and it just went viral. I think that's where it came from.
I remember you telling me that years ago.
Yeah.
But when you have a coin that's totally based on supply and demand and its prices, and you have guys that literally won't sell, this is as cult as it gets.
Yeah.
Like
it is a bit of a
incredible.
cult.
and you know, I would have been the first one to say, hey, like I'm not one of my rules was I don't trade cult stocks. So Tesla. Yeah. So people will be like, oh, what a dummy, you missed that. I missed a lot of things.
That's okay.
Yeah. So this one I was just like, you know what? It just fits. Got to be in this one. Not missing this. I'm breaking a rule to be in, because you can project from it.
Yeah.
And if they're not selling at a certain level, well, it's not going to go below that level.
Yeah.
And
it's not a company either. That's the other thing. Like Tesla, you can lose money on Tesla by having a bad buy timing, or by
earnings.
You know, Elon doing something, or you know, whatever company misstepping or missing earnings, or you know, having a bad PR. Whereas crypto, like Bitcoin specifically, is such a pure just this is what the data is, how many people hold it.
Yeah,
pure price
and
action.
That's what I love.
Supply demand.
Yeah, supply and demand. Make it simple.
Yeah,
I love not dealing with earnings. I like not dealing with, you know, Elon voted Republican, so let's short his company. Yeah, or we won't go down that path.
Yeah, whatever, right?
But it's nice to just deal just in math.
Yeah,
just numbers. You know, men lie, women lie, numbers don't.
Yeah. And so maybe just on the information side, what I've admired about being in the Not Your Broker community is you got access to a lot of information that people aren't seeing on Twitter and whatnot. Yeah. Maybe talk about the information you're getting and just even general noise and where you see alpha in the information flow in this industry. Yeah,
so that would be tough to talk about for the like where I'm getting information from, but a lot of it's just off my own models, right? So a lot of it has to do with like how I forecast, if that makes sense, and that's, you know, growth, inflation, and then going, what type of regime are we in, and specifically what the regime is how you allocate your money.
And what kind of regime do you think we're in today?
We're probably going to go up. Like just to
a little honest. Goldilocks?
Yeah, I would say that, I thought we were in like I think we're going to see a deflationary period at some point, but I don't think that is currently right now. I would be surprised if we do not see all-time highs in the crypto market.
I mean, Bitcoin's at 52,
but that call was made when we were at 25 to 27.
Yeah. So, you know, get in Not Your Broker /Omega and you'll see this stuff. It's pretty awesome. But, I mean, even just anecdotally, I don't have people DMing me at, you know, this run to 52 like I did at 64 2 years ago, two and a half years ago. So it's definitely a lot quieter move to 52. I mean, this is within the echo chamber of crypto. Obviously, everyone's so excited, but outside of it, no one's DM'd me and saying, yo, like, how do I buy Bitcoin again?
Yeah, no. And as someone who is on the outside of that, like I had, like my mom literally be like, oh, I saw something about crypto. There's the crypto king who got,
oh gosh.
And that's the news cycle she's saying, but nothing else.
Yeah. My neighbor was in that, and I remember telling him, dude, that's a Ponzi for sure. Don't put your money in that. Yeah. Whenever anyone guarantees you like 5% a week return, 100% that's a Ponzi.
Yeah, not happening.
That's impossible, mathematically impossible.
Yeah, per week, yeah.
Yeah, per week, bro. Yeah. That's what he was saying.
Yeah, that's he bought his CS:GO skins or something.
Yeah.
But and it reminds me where I was leading that is on being on the outside of it previously is I would see all that type of stuff in the news cycle and being like, it felt negative. Like there was nothing like, yet when you'd come and check back on it, you're like, geez, prices like just keeps going up. But I've seen in the news cycle, one thing this month and it was negative. And then I saw another thing that was negative. But now it's going to all-time highs. So it kind of makes me go, okay, that's the part of the cycle we're in. Is people are still obviously outside of crypto, or I would say are still very bearish.
Yeah.
Then you're going to have more systematic guys, your Wall Street guys who are going, they like it. They would have probably a bullish trend right now.
Yeah, and I mean, the Google search trends and data actually shows this. I mean, it is trending up now, but if you go check the Google search trends, I don't know if I can pull this up right now. Let's go Bitcoin and just reference this in real time. Look at that. Can I pull past day? Let's go past 5 years. Like, we are nowhere near
no, that's what
where
I'm
we
saying.
were. Like, this is Canada, obviously.
So it'll be a little skewed.
But let's go worldwide again.
Yeah, nowhere close.
Yeah.
However, from a line chart perspective, that's going to go parabolic soon.
Yeah, totally. I'm trying to see what this spike may have been. This might be a data error, but September 2019. Don't remember what was going on in the space then. But yeah, I mean, these are pretty big numbers in 21. Definitely showing. This was probably, I think this is the second top when Bitcoin hit 64, but we are nowhere near.
No.
And actually, it looks like it peaked out at the ETFs here.
Yeah, which makes sense. But we also have the Ethereum ETF coming.
Yeah, but so that peaked out at ETFs. They peaked at 49. ETFs went live. GBTC started unlocking, redeeming, and selling. This now has come back down, but Bitcoin's now at 52.
Yeah.
So it's gone higher.
Yeah, it is. Bitcoin isn't an impulsive bullish structure, right? So order flow directionally is up.
Yeah.
Could it have a pullback back to even 35, 30? Of course. I actually think that would be a decent probability. But like a degenerate strategy is just get long on red. On a red day, go long. It's I wouldn't want to be betting against something that has a magnet to all-time highs because, I mean, if you're a technical guy, anyone that does this, they're going to know that stuff like that is a self-fulfilling prophecy, right? So everybody's looking at the all-time highs in crypto.
Yeah.
What I think will happen is you're going to likely get a stampede when you're above. And I think you'll see that through passive inflows, through ETFs. I think you'll see retail come in. And I think that's when you're going to see the news cycle of, wow, Bitcoin is alive again.
Yeah.
They missed the whole move up to the all-time high. Maybe we'll clip this in the future. Hopefully this goes well.
Yeah.
And we'll go, yeah, now they're back.
Yeah.
And that might lead the move to 100, to 140, to 200.
Yeah.
We have no clue.
And we knew the GBTC redemptions would happen. So the history there is that Grayscale had a bunch of people's Bitcoin. It had locked redemptions. So for almost 2.5 years, those people couldn't redeem their Bitcoin out. And so those shares traded at a very steep discount because it turns out that there's a lot of leverage in the system with 3AC, Three Arrows Capital, FTX, that all happened, Genesis, etc. So when the trust transitioned to an ETF, which Grayscale ironically actually won the court ruling against the SEC to convert it to an ETF, and that's how these ETFs were allowed to go forward. But once that transitioned to an ETF, all of a sudden they became liquid again. And so we saw redemptions. Now, one thing that Grayscale did is they had the fee at 150 basis points, so 1.5%, while all the ETF providers had it 25 bips, 26, 48, depending on if you're Invesco or BlackRock. So there was going to be that redemptions. Then on top of that, the FTX estate sold their GBTC. Right. So that's where you see this period here of quite a bit selling pressure. We're talking like $600-700 million a day that came on to exchanges. And how the redemption process works is that the SEC would not allow in-kind redemption, which means if I have a share of GBTC, I could redeem it for the Bitcoin, not, selling, which is what happened. So in the current process, every time you redeem your GBTC shares, they have to send that Bitcoin to Coinbase Pro or Coinbase's exchange. It's sold on the exchange, and then the dollars are brought back to the person redeeming. So caused a lot of sell pressure. That has died down. That went from the hundreds of millions to now I think like 70 million as of yesterday. But
it was a good buy the dip.
Great buy the dip. Yeah. Actually, this trade here, this move, even on Solana, I made some good money on that. That was nice.
Yes, you did.
Yeah.
You were Mr. Consistent for that whole move. So credit to Josh.
Yeah.
Yeah, I mean, you kind of, once again, in Omega, you were on the ball with the whole GBTC redemptions. I'll be honest with you, and maybe it's bad to discredit myself. That caught me off guard.
Mm-hmm.
I was caught off guard by the GBTC sell-off, but I was happy to buy the dip.
But I mean, this kind of looks like sell the news as well. I just don't think people understood the underlying structure of the market, what was happening.
Yeah.
And I mean, you can see it on chain. So there's only 1,000 people that are following this Twitter account that could see the flows from Grayscale wallets to Coinbase. And I mean, if you don't have that data or you don't understand these markets, you have no freaking clue what's going on.
You just information, number one.
You just wake up, market opens at 9:30, Grayscale's moving Bitcoin at 1,000 BTC clips to Coinbase, and you just see massive, tranches of Bitcoin showing up on the order book.
Yeah. I mean, and that was our morning update from you, right?
Yeah.
You were going, hey,
every day
1,000 coming in. Here's how much is coming out. There's some concern to it. You don't want to be buying into it.
No.
But wait till it gets, wait for your setup.
Yeah. And actually, credit to this market. It was a pretty orderly unwind.
Yes, it was.
There were buyers that were buying into that. So part of it were the other ETFs that saw huge net inflows, of course, but there always seems to be someone that was defending the price of Bitcoin.
And I find...
and they were probably arbitraging that situation too. For them, they were like, this is a brilliant opportunity.
Yeah, are you kidding me? That's you. Of course, they don't. They take advantage of everything. That extra percent a year is everything or more. I find too with just news events, for example, like a CPI, the first reaction is usually the opposite of where it's going to go. So I know a strategy we'll employ, not a ton of risk associated to it. If you get the sell off of CPI, we buy it, and we'll do the whatever the first reaction is. We do the opposite after we get our dip, or if it extends off CPI, we'll short.
Yeah, and anyone who's ever looked at minute candles in crypto knows that the market makers pump it and then rip it down, and then there's these weird oscillations in the price action of crypto that everyone's seen the scam wicks over the years.
Yeah, and Forex markets, TradFi, market makers are incentivized at these liquidity pockets. So that's why you'll see people get stopped out, and offers typically a great buying opportunity that you can take advantage of.
Yeah, and speaking of which, I actually also kind of showed you guys the liquidity heat map or liquidation heat map. This is a tool by CoinGlass that I love looking at. So what this is showing is basically pulling in the data from the various derivative exchanges and kind of showing where liquidations are at. So you can see down here, there's a bunch of liquidations below, whatever this price is. And I guess the exchanges, market makers, et cetera, they're kind of incentivized to bring the price to these pockets because, that's how they make a lot of money.
It's a lot of orders.
That's a lot of orders.
Yeah. No, they absolutely are. So anybody watching, that's a outstanding tool.
Shout out CoinGlass. This is a phenomenal.
And you can do it for everything. Josh is usually pretty good at posting this stuff as well for all of us, but that's the type of data you want to be paying attention to.
Totally.
You want to know what the order flow looks like, and that's going to give you a partial edge.
Yeah, and again, unless you're in this ecosystem for as long as some of us have, like you wouldn't even, most people don't even know this exists, but this data does, and it's pretty cool.
And the ones that do are not happy you just showed it.
Yes, we'll just close that. But no, I mean, the data is all public anyways.
Absolutely.
So, and we're here to give you good information. So if you're watching this and you're seeing content like this, we have no problem sharing it because we want people watching our podcast that they learn that. So,
well, we want people that are like educated.
Yeah.
Stop getting taken advantage of by Ponzi people.
Yeah, totally. So we've talked about, I guess maybe, and we briefed over this, but when a new user comes to Omega, how should they use the group?
Yeah, I would sit back and learn, like at least follow it for however long until you feel comfortable. Don't come in and start trading unless you've got, at least a few years of experience, minimum. I would come in and just take a look, get used to the charting. Same with Not Your Broker, right? Like get used to the charting, the layout. And I think at some point we'll have some sort of educational series.
Yeah.
Where it'll at least give you like a fundamental knowledge of what you're looking at, why you're looking at it. And it's going to give you an advantage because what you do as a trader, you look for points of interest that are going to give you a higher probability. Like if you're just, I need to make money every single day. I mean, if you can do that, good luck. You're competing against larger firms that are high frequency trading. So you're at a significant disadvantage. But you just want to have key points of interest that are a bit higher time frame, in my opinion. And that's the stuff I'd be paying attention to if it was me.
Yeah, we might overlay a few of those examples so people can see that. So maybe a bit about kind of the industry in general, in terms of like products like vaults, pair trading, exchanges. Like, what do you like in the industry from the product standpoint of tools that you've used to execute?
Yeah, from a vault perspective, I've used Perpy, which is, I love it. I just love that these companies can build up this infrastructure for people to come in, and if you're good at what you do, people will notice. And
it's in the data.
Yeah. And performance speaks for itself.
Yeah.
So that's what I love. I think TradFi too, it would be nice to have more verification.
Yeah.
More, people make stuff up. So how do we incentivize people over the internet to be more truthful?
Yeah.
And I think having platforms like that is outstanding. And that's why I love blockchain.
Yeah.
Like it's awesome. The transparency is awesome.
Yeah, and for those that don't know, a vault like Perpy is a smart contract that when you deploy funds into it, it goes into a vault, everyone can see it, everyone can go look at the on-chain data, audit its performance, and then what it's doing is allocating or placing trades on various different DeFi protocols and platforms, which again, everyone can see on-chain, completely transparent, and they can see it in real time. So every time the vault trades, they can see it. Every time someone puts money in, takes it out, it's all transparent. And again, these things are, kind of solve a lot of issues with traditional regulation, even around some of this stuff when it is that transparent.
Yeah, and I think that's why they should be regulated.
Yeah, totally.
Like it's
a standard that makes tons of sense.
Yeah, no, it does. Remember Profitly?
Yeah. I mean, anyone could post anything.
Yeah.
And then they're getting a following, which, again, is kind of predatory.
Yeah, it is. And that, once again, that was one of the main reasons we came in. We see these guys with a following, and I'll see the stuff they're posting, and I'm like, that's garbage.
Yeah.
Like that's predatory. That's garbage. And we're coming for you.
Yeah.
To be honest.
Yeah. Join Omega. It's a good resource. I think maybe we can kind of start wrapping this, but I wanted to maybe get into your own system. I mean, of course, you don't want to talk about everything, but if you're to like describe your system and the process for putting on a position, what does that system look like? Give us the magic, Mike.
Yeah, well, I can't give you my system. Yeah. What I can say is, like,
give the people something.
Yeah, I mean, focus on supply and demand. That's how markets move.
Yeah.
So focus on that. Learn about that. Study momentum. Honestly, like, make it more mathematical in the sense that, like, focus on standard deviations. You know, something trading between, you know, 2 to 4 standard deviations below or above, in that range. That's going to give you a significant range. Trade things that are in their extremities. That will give you a significant edge. That could be anything from choppy range. There's ways to find extremities. I mean, we can't really talk like or show on a podcast how to do that properly, and that's where maybe an educational series comes in, where I can go, here's kind of what it should look like.
Yeah.
It's not a everything tool. Understand like Elliott wave. Just like understand human psychology and how humans move in like as a herd, essentially. Like understand that they move in waves of 5, corrective waves of 3, and you'll start to see it's not perfect. And you should never rely on one tool to make a decision ever, like ever. But that will give you enough of a framework to at least make some money.
Yeah.
Is there anything that you in particular you would want me to share?
No, I think when people come into Omega, they see you posting charts. They say, you know, sometimes you'll see this red zone, which you would call
supply.
And when I see that on a chart and the price kind of goes into that zone, you know, I'm not necessarily thinking longs.
No. And that's kind of how that works, right? So typically what retail does is they buy supply and they sell demand. And that's where kind of that advantage is, you know, as they buy into supply, we're short.
Yeah.
Or we're selling. So you're buying into sells. And then in demand, they're selling and we're buying into demand.
Yeah.
And there's ways to find, well, you can go through order blocks. You can do, there's a million ways to get demand, and there's certain ways to get better numbers, which I'm not going to give out. That's like part of the, but, you know, the tool that Josh just showed, that is a great tool. And if you can find confluence, which just means multiple things aligning, that makes your probability of winning go up. We like that. Because you're playing a game of probabilities when you're a trader.
Yeah, totally. I'm actually just going to brief through Omega right now and just see if I see anything that stands out to me. I mean, this group is so good.
I posted the Bitcoin from August to today earlier.
Yeah, I see Christian overlaying Jupe. Some Solana here, Christian. Let's see. Yeah, I mean, like, folks, this is like, you can't see the squiggles on here, but I can tell you the squiggles. So basically what I see, Mike, here, and we'll pull it up at this point in the pod, it's just this red dome area, and, you know, the price now has gone into that zone at about 52 to 55K. And then you have this demand, this green demand rectangle at, 22 to 19, which people would be like, yo, if we get to 22K, the world's ended.
Yeah, well, you'd want to buy. I don't know if the probability is high of seeing that, but there is a weekly demand above that, no?
Yeah, there's definitely another green weekly demand. So I see the weekly open at 48. Then there's the Q2 22 open at 45. And maybe talk about this. Like I often see you guys posting like weekly open, yearly open, etc. How do those open prices, are those from that candle?
Correct. 'Cause it's just based on price.
Yeah.
So yeah, we focus on weekly opens, monthly opens, quarterly opens, yearly open. If I didn't say that, yeah, these are like critical numbers, right? So to me, if you remain above the yearly open, you're bullish. If we get back down below, we'll call that a deviation, and that's where you want to start to be a little cautious if you're betting on it up.
Yeah. And you have right here these kind of stair-step lines. So it goes 1, 2, 3, 4, and now we're in this fifth leg.
We're in fifth, yeah. And what's interesting about that is typically in a wave 5, in commodities, that can be the most powerful move. So it's going to be interesting to watch how this plays out. Like, are we going straight to all-time highs?
Oh, my goodness, Mike. So I just saw the post that you had quoted.
Yeah.
So, I mean, we're going to show this, but this is at 25K here, showing the demand. So that's where that demand zone came from. I don't think we ended up hitting that. But
no, the red line was the invalidation, so people will see this. So trading, think of it as if and then statements. So if we remain above the invalidation, you're in a bullish sequence. If you go below the invalidation, then your point of interest is that weekly demand.
And, you know, the blue lines on here take you to 48. They literally, it's incredible, actually. So we're going to show that with my reaction because I think it's just, all real time too. It's amazing. Is there anything else? Fib levels, I have that here. What are Fibonacci levels?
Yeah, Fibonacci, I would almost consider that just basic. That's like, hey, you have a structure in place, and typically you're going to retrace a structure at some point, and that can be and it depends what part of the fractal you're in. So on a 4, maybe retrace 38% of the move of you know, from bottom of 3, top of 3. 1 to the 1 move, that's going to typically retrace 50% to 61.8%. The rule based is it can retrace all the way down and create an equal bottom. As long as it doesn't break below that, it still counts. But yeah, so there's rules to each fractal.
Yeah. Cool. I mean, do you have any questions maybe for me to wrap this thing up?
I feel like we kind of covered anything. I mean, I feel like it would go on for a long time if I started asking questions. Because I'd go, I mean, Josh is someone who's been in the space for a long, long time and who has a fairly substantial network in the space. When are we going to get your guys on here?
Yeah, we're going to get some guests. We're going to get some guests on here. Some good people. Yeah. People got to come to Toronto, though. I mean, crypto started in the city. I shouldn't say started in the city. Ethereum started in the city. The city has a rich history of this industry.
It's a much bigger hub than I even knew.
Yeah.
And I mean, that didn't mean much because I didn't really think anything of it. But then as you start to meet people and you learn, there's a lot of crypto people in Toronto.
Yeah. So if you're listening to this, come up to the city. Let us know. We'd love to have you on. We're interviewing founders, fund managers, traders, people from the city. We think Toronto's awesome. So yeah,